So I got an email the other day, and it came from a subscriber, and the question for me is economic prepper. I'm new to investing. I'm new to the stock market. I'm concerned. I'm worried. Stock market is down. He's single family, or rather he's a father, single income family, and he's the breadwinner, and he just started investing in the stock market, and he doesn't have a whole lot of experience. He's got a family. He's got a baby on the way, and they're currently renting. And he basically just told me, hey, the S&P 500 is down, the Dow Jones is down, NASDAQ is down. I'm concerned, should I be selling everything right now? And I told him, I said, hey, I briefly reply back to him. I get a lot of emails, so sometimes I'll either reply back to the email or I will do a video like this one here. And that way, more and more people can see the response that I give in terms of, should you sell everything now? Should you sell all your stocks now? Should you sell your house right now? Should you buy a house right now? Should you invest in real estate? Should you invest in cryptocurrency? Whatever the heck your asset is, what asset should you hold? What asset should you sell? What asset should you buy? The answer is really short and simple. I can't tell you what to do. I'm not a financial advisor. But I will give you some information that I'm considering on a regular basis. I will let you know in many cases where I'm putting my own money, and you can make your own decisions, because the best decisions are ultimately the decisions that you can go to bed with, you can go to sleep with. If you make an investment decision based on what someone else said, that will generally be one of the worst investment decisions that you could ever make. And I say this from experience personally, because I used to follow different people, sign up for this investment list, and whatever people say who I trust, I will buy that stock. And the problem with this is, when you invest in something that you don't understand, when you put your money someplace where you don't understand the ramifications of it, you are subject to the whims of the market, and then fear can set in and force you to sell everything at the worst time. So I'll give you a great example, right? So here's something you need to consider. Are you in the wealth building phase of your life, or are you in the wealth preservation phase of your life? Now, if you're in a situation where you're living paycheck to paycheck, then that is, generally speaking, an income problem, meaning you don't have enough income, or your debt is too high, or your expenses are too high, or all of the above, right? So if your income's too low, you got to get that up. If your debt is too high, you got to reduce that. If your expenses are too high, you need to reduce that. It's checks and balances. So you got to look at your own situation and figure out where you fall. Now, the subscriber emailed and said that all of his investments are down. Stock market is down. What do I do? Should I sell everything? And I told him that the way this investment game works is, the basic premise of this is, you want to buy an asset, and at some point in the future, you hope that the asset is worth more. And you want to do some research. You don't want to just buy some stock, for example, Tesla stock, or any old stock, Apple stock, Amazon stock. You don't want to just buy any old stock and just hope and pray. You want to look at the history. What does the stock look like in the past? Now, me personally, if I'm a brand new investor, I'm probably going to be looking at a basket of stocks, maybe an ETF, maybe an index fund. And basically all these is a collection of stocks. That way you're not invested in one company and you're hoping that this one company doesn't go out of business, right? But what I like to do is I like to look at the historical trend, the historical performance of these stocks, ETFs, index funds, investments, and just see, what have they done? What have they done in the past? Because whatever they've done in the past, so long as the market hasn't changed drastically for their businesses, if we're talking about individual companies. So long as the economic landscape hasn't changed drastically, what they've done in the past is likely to be an indicator of what they may do in the future. Now, of course, past performance is no guarantee of future performance, but it's generally one of the best forecasting tools that we have, since none of us have a crystal ball. So in this case here, should I sell everything because the stock market is crashing? Well, a lot of times I like to think about, well, what would the 1% do? What is the 1% doing right now? Well, I'll be honest with you. I don't think the 1% selling right now. I think the 1% already sold everything that they were planning to sell months ago. Why? Because I believe that the 1% understands economic cycles. The Fed Reserve has already been raising interest rates this year. The Fed has been raising interest rates, what, 5-6 times this year already? We've already experienced 3 back-to-back 75 basis point rate hikes from the Fed this year. And historically, we've never seen that in the past. This is the most aggressive that the Fed has been in the last 10, 15, 20, 30 years, 40 years possibly. So we've already seen 5 rate hikes from the Federal Reserve this year. We're anticipating another 1 to 2 Fed hike interest rates before the year 2022 ends. And we're expecting additional rate hikes going into 2023. Assuming that the Fed doesn't completely crash our economy as we speak and drive us into a Great Depression. But I don't think that the Fed will do that this time. I don't think that the Fed is going to do that this time. And so this actually makes me very, very hopeful for the future. I think that the Fed could actually be creating one of the greatest wealth building opportunities for the average American that we've ever seen. But the average American would need to be prepared to take advantage of this when the opportunity presents itself. And right now, families are facing desperation. The stock market is crashing. The housing market has slowed down. We're not seeing a housing market crash yet. But as interest rates are going higher, more and more families can't buy homes. Sellers are sitting, their listings are just sitting on the market. They're not moving in a lot of cases. I mean, transactions are happening, but much slower compared to, say, a year ago. So what I'm doing right now is, and what I've been doing, not just starting today, but I've been doing this, I always do this. I have basically a grocery list. I make a list of great companies, great stocks, great ETFs, great index funds, types of real estate that I'm looking for, types of online businesses that I would like to possibly acquire or start. And I'm making a list, and I'm checking it twice as we go into the holiday season, right? And as these assets go on sale, right now, there's a lot of assets on sale. And personally, I think that we're going to see even better deals in the future. But since I can't predict the future, I'm buying up assets wherever I see a deal. And I don't drop all my money at once. I've been stockpiling cash, and I've been telling you guys this for a long time. I've been stockpiling cash. So there's cash sitting on the sidelines, and this is what the 1% are doing. I'm not just sitting in cash. The 1% understand what assets to move in between, because they understand that assets values change over time for various reasons. Supply and demand, fear and greed. Those are the 4 basic reasons why asset values will change. And they understand the psychology of markets, and they have the money and the power to manipulate markets. And they have the connections because they understand when market directions are likely to change. So when everybody and their mom is rushing out and buying up houses at low interest rates, driving up real estate values, investing in their 401ks, investing in their IRAs, buying up index funds, ETFs, stocks, they're seeing this market. They're seeing the stock market. The Federal Reserve was running that money printer. The Federal Reserve was running that money printer, artificially boosting up asset values. Because what a lot of people didn't realize is how much the Fed was enabling markets to hit new highs constantly, back to back to back to back. I thought it was so weird at first. Why is the stock market going up when there was a massive shutdown, right? Why is the stock market running up? You know, the reason why there was a shutdown hadn't been resolved. The cause of it hadn't been resolved. There wasn't a cure yet. There wasn't anything like that yet, right? Stock market started running up. And it was interesting because if I remember correctly, the stock market in 2020 hit the low. Like, basically, it crashed in 2020. The stock market crashed in 2020. And I want to say right around March 20th-ish, that was the low of the stock market. Don't quote me on that. It was like the third or the fourth week of March in 2020. You can look it up on any stock chart, pull it up, go back to 2020, and you will see that when the stock market crashed, so the peak of the stock market was like February-ish. Stock market went down to like 18,000 something, at least on the Dow Jones Industrial Average. We went from something like 30,000 on the Dow down to 18,000. Smart money was scooping up stocks. I was buying companies at dirt cheap prices. I wish I bought more, to be honest. But the stock market began to rally. Fed chair Jerome Powell, well, I forget who the Fed was. The Fed chair at the time, was it Jerome Powell at the time? I forget. The Fed started lowering interest rates. The Fed started pumping money into the economy, and that was the start of the next 24-month rally in the stock market. A tremendous amount of wealth was built, whether it was artificial or not, doesn't matter. Tremendous amount of wealth was built. During that time, smart money was buying up stocks. They were buying up real estate, and they were refinancing real estate as well, taking advantage of the low interest rates that the Fed was offering, locking in 30-year fixed rate mortgages at historically low interest rates, like never before seen interest rates, right? And that was the start of the rally of the stock market that we had seen for the last 20 months, 24 months. So I guess what I'm saying is I'm looking at investments that have declined in value, but are still worth a lot based on intrinsic value and future projections of what I expect some of these companies to be worth going forward in the future. VOO, what is it? S&P 500 ETF VOO, ticker symbol VOO, is one particular ETF that I like to invest my money in. And I like this because it is a diversified basket of stocks in it. It represents the S&P 500. So I don't worry as much about any one company in there. There's so many companies in this VOO ETF that I'm not worried about if one company goes out of business, that company goes out of business. Not worried about it. Not worried about it. I've done my homework, and I've looked at the history, and I'm expecting that the future will be better going forward. Now, again, I'm not putting all my money in now. I'm buying at certain points that I identify as being good opportunities. I'm also looking at opportunities outside the stock market. A lot of people don't realize that it's not just real estate in the stock market that you can invest your money into. It's not just gold and silver and cryptocurrencies. A lot of different assets that you can put your money into, potentially. And you also have to ask yourself, are you in the wealth building phase or are you in the wealth preservation phase? So if you're in the wealth building phase, you're probably subjecting your money, if you're smart, to the types of assets that will likely go up in value. Now, if an asset goes up in value, if something goes up in value quickly, it's probably going to be fairly volatile. Now, let's just say, you're like, I'm just trying to preserve wealth. You might consider investing in, putting your money in bonds, possibly gold, high yield savings account. Really depends on what you're trying to do. Again, there's tons of different types of assets you can put your money into, real estate, and more importantly, some of the assets that you can put your money into, that could make the most money, most people are not even aware of these. Most people are not even aware of these. So and here's the other thing. If you're in a wealth preservation phase, maybe I don't want to be invested in the stock market. Maybe the stock market's too volatile for me right now, right? Maybe if I'm just trying to preserve my wealth, I want to stay as far away from any type of volatile investment. I want to stay away from cryptocurrency, stay away from the stock market. Maybe I just want to stuff my money in a high yield savings account, buy some AAA grade bonds so I can sleep well at night, and wait for the next opportunity. Right? Because sometimes you don't need to be invested. Or maybe I want to change how much I'm invested. There's an ebb and flow to it. And you got to understand markets to be able to understand what's going to work best for your financial goals and objectives. So is now the time to sell? I'm not selling. Anything I was going to sell, I've already sold. And right now I'm camping out, preparing for the opportunities that will continuously present themselves. So as the Fed continues to raise interest rates and do whatever they do, I got my list. I'm checking it twice. I know what assets I'm looking to buy. I know what assets I'm looking to invest in. And I'm also looking at, a vast variety of asset classes. So again, not just the stock market, not just real estate, not just bonds, not just gold, not just your traditional assets that the average person knows about. And these pockets of opportunity is where the real money is being made. But stock market is absolutely there. Stock market is absolutely one of them. But yeah, the Fed is creating a massive opportunity and is in many ways making it easier for the average person to become rich. I'm going to share more information about this. Drop me some comments down below. Let me know if you have any questions for me. Let me know what you guys are doing, what you're seeing in the markets. If you're new to the channel, consider subscribing. Drop a like for the video. I really appreciate that. And I'll see you guys on the next one.